Hey, I'm JD Peck at PRMG. If you're watching this video, it's probably because you've already been denied for a VA mortgage by another lender, or you were referred to me by someone who thought you might be able to use my help due to some possible credit struggles or credit challenges. One of the most unique features about the VA mortgage is how incredibly lenient the guidelines are and how accessible funding is for veterans and service members. If you felt discouraged by traditional mortgage requirements or the requirements of other lending institutions who may have their own overlays on top of VA guidelines, you've come to the right place. So let's start with credit scores. It is in fact true that VA does not have a minimum credit score requirement. This means that even if your credit isn't perfect, or even if it's not good at all, you still possibly have the ability to qualify for a VA mortgage. Now, some lenders might have their own guidelines, which are overlays on top of the VA mortgage requirements. However, overall, VA is far more forgiving than any of the other insuring agencies. And when you're working with a lender who is direct, like us, PRMG, we have the ability to help when a lot of lenders cannot. Now, maybe your credit is just fine, but your debt-to-income ratio is considered excessive by some lending institution standards. Now, here's the deal. With VA, there's not a debt-to-income ratio maximum. If you're being told that your debt-to-income ratio must be under a certain threshold, such as 45 or 50%, which is pretty common with many lenders, that is a lender guideline, not a VA guideline. Again, when working with a company like PRMG, who is a direct lender, we have the ability to go above and beyond that because we follow VA's guidelines. We don't create our own. It's not uncommon for someone to have higher debt-to-income ratios, especially with current housing allowance if you're active duty. Now, this is especially helpful in today's housing market where interest rates are higher, home prices are high, and you might already be paying rent that's the equivalent of what your mortgage payment would be. Residual income requirements. So what is residual income? Residual income is the amount of funds that are left over at the end of the month after your taxes are withheld, after you've made your mortgage payment, after you've made your car payment. That's the amount of money that's left over at the end of the month to support yourself and your family. This is what's most important to VA. It's not about your debt-to-income ratio. Last but not least is my very favorite one. You're going to see information all over social media and all over online about this. Yeah, VA doesn't have a minimum credit score requirement, but you have to have perfect credit for so many months. That is false information. I've helped hundreds of families over the past several years who have had derogatory credit within the past 12 months and have had low credit scores, and I'm still able to get these done if there are extenuating circumstances. So what is an extenuating circumstance? An extenuating circumstance is something that has happened that is beyond your control that has caused you the inability to make payments on time, even if it happens within the past 12 months, even if it's happened within the past 3 months. Oftentimes we see this when someone has deployed and doesn't have access to online services to make their payments, or when someone has deployed and they've given all of their information to their spouse, but there's a two-factor authentication in order to get into the account, the payments can't be made. Other circumstances would be upon separation, when you separate from the military but don't have the ability to find immediate civilian employment, or when you've separated from the military but you're waiting on your disability rating to come in, and as a result, you had no income during a specific period of time and weren't able to make your payments. The best part about this is this isn't just one or the other. All of these things can be combined for the same person: low credit scores, high debt-to-income ratio, derogatory credit in the past 12 months with extenuating circumstances. Even if all of these things have happened, we still have the ability to help purchase a home. This is what's unique about the VA mortgage, and this is what's unique about how PRMG can help with the VA mortgage, because we don't have those restrictive overlays that many other lenders have. Now, I do want to be very clear and transparent on this. If you do have derogatory credit within the past 12 months, it is crucial that we're able to prove those extenuating circumstances. If your derogatory credit is due to irresponsibility or negligence, this is not something we can move forward with. You must have a clean credit history for 12 months if we're unable to prove those extenuating circumstances. But if those circumstances exist, we can help you. If any of this information you've gotten today sounds like it might be a good fit for you, I'd love for you to check out the link above, the importance of completing an accurate loan application. This is a key step to making sure that your entire process runs smoothly, is providing accurate information. Check it out. I look forward to helping you.